Hello, welcome to the weekly technical analysis review for Tuesday, December the 10th. I'm Rafi Bayajan at XM.com, and this week we're going to be looking at the dollar yen, the pound dollar, and WTI oil futures. So let's begin with the dollar yen pair. Looking at the momentum indicators, they're painting a neutral to bearish picture in the short term. RSI has flatlined just below the 50 neutral level, but the stochastics are still in overbought territory. So that suggests the risks are to the downside, and that is we can see that in price action as well at the moment. There is though strong support coming from the 50% Fibonacci retracement at 108.42, so that's the retracement of the down leg from 112.39 to 104.44, and also the 50-day moving average also is close to that level as well. So if prices were to slip below that support area, that would shift the short-term bias to a bearish one, and we could see the declines extending towards the 107.50 region of the 38.2% Fibonacci, and that would also risk shifting the neutral to bullish medium-term outlook to a more bearish one. So the bullish medium-term picture did come at risk ever since prices slipped below that uptrend line, and at the moment we can see they've increased their distance below it. So in order to see a return to that bullish picture, we would have to see prices climbing back above that uptrend line, but that could be difficult. We do have immediate resistance coming at 108.80, where the 20 and 200-day moving averages have converged. Slightly above that is the 109 handle, and then further up, another challenge is the 61.8% Fibonacci retracement at 109.35, and then we've got that peak from November at 109.72. If all those hurdles are cleared, we could see prices being able to climb back above the 110 handle and the uptrend line, and then after that the next target would be the 78.6% Fibonacci at 110.69. Let's now turn to pound dollar. So pound dollar is very bullish both in the short and the medium terms. At the moment, prices have hit a bit of a resistance at 1.3180. That level also acted as resistance back in April this year. Momentum indicators suggest that there is scope for additional gains in the short-term. RSI is just at the overbought level around 70. The MACD histogram you can see is still climbing. So if prices were able to break above that resistance barrier, the next resistance would come at the 1.33 handle before challenging that 9 months top of 1.3381 from back in March of this year. If though we were to see a bit of a downside correction, we do have, of course, the UK elections coming up and this week, so there's plenty of risks around. Support should initially come at the 78.6% Fibonacci at 1.3076. So that's the Fibonacci retracement of the down leg from 1.3381 to 1.1957. Below that is the 1.30 handle. Just below that is the 20-day moving average. But if prices were to fall further towards the 61.8% Fibonacci at 1.2837, that would shift the short-term bias back to a neutral one, whereas a slip below the 50-day moving average would shift the bias to a bearish one. Further down, the key support would come there at 1.2669. That's the 50% Fibonacci near the 200-day moving average, whereas if we see declines as low as the 1.25 handle, that would shift the positive medium-term picture back to a neutral one. And finally, for today, having a look at WTI oil futures. So we do have that uptrend that began in September still intact, but looking at the momentum indicators, they're painting a mixed picture. The MACD is fairly bullish for the short term. Looking at the stochastics, they're pointing to a possible near-term downside correction. And looking at price action today, we are seeing prices are being supported. They're being propped up by the 50% Fibonacci of the down leg from 66.57 to 50.51. So that is around the 58.54 level. Slipping below that, we've got an important support region between the 220-day moving averages, the Kijun Sen and Tenkan Sen lines, and the top of the Ichimoku cloud. So that starts at 57.55 all the way down to just above the 57 handle. So if that support region is broken, we could see prices slipping towards the 50-day moving average. That's at 55.86, and that would erase the positive momentum and shift the near-term picture to a more neutral one. If we were to see further declines, the key support below that, the 50-day moving average, is the 23.6% Fibonacci at 54.30, and then slipping below that would risk a shift to a more bearish outlook in the medium term, and it would bring into focus the key support region that has held up pretty much since the spring of this year. So that key support area is 50.51. So that level is critical in order to maintaining a neutral picture for oil prices. So that's it from me. Thank you very much for watching, and have a great day.